You're listening to the Homeboys podcast, recorded in our Indiana office and with combined 40 years of experience. Here's your hosts, Clint and Scott.
What is up, everybody? You're with the Homeboys. We are thankful that you're joining us today. We are talking about this crazy real estate market and everything that is going on. It's kind of hard to explain. We've never seen a market this red hot before. It's been a fun ride, sometimes a challenging ride, but today we're going to break into some of the reasons for that, and we're excited to have you. As always, I'm here with my very talented co-host, Mr. Scott Adams. How are you, my friend?
I couldn't be better. How are you doing?
I'm good. The weather's broken a little bit in Indianapolis. The sun's out.
Yeah.
We've unthawed. It's pretty...
Yeah, I like to fish, obviously, and I have received 3 separate phone calls today all about fishing. That's when I know the weather is broken.
It's time, man.
People are itching to get out and
it is on.
Get that sunshine.
It is on. I was in southern Indiana yesterday looking at a couple of our commercial projects and taking my mother to the doctor at the same time, which was awesome. But it was just great to be out, and I don't know. We kind of haven't been out in the field much because of the weather here lately.
Yeah, I'm tired of being cooped up. I'm ready for some trips. We were planning some family vacations last night. My family, extended family, we all get together and go on a big vacation. So we were having fun last night trying to pick out where we're going. Normally we go to like Gatlinburg or somewhere like that. And we're going to try something new this year, so that was fun.
Where are you going?
I don't know. There's some spots in Pennsylvania near where my brother lives that I think it's called Jim Thorpe something, and it's like a mini Gatlinburg without most of that touristy stuff. It's like
all the crazy traffic.
Yeah, that part's crazy. But Gatlinburg has a lot for the family and stuff. Yeah. So it's not where you or I would pick to go. But when we've got our kids with us, you got to keep them entertained. So.
Totally, kids are the driving force behind the vacation.
Yeah, I was actually telling my mom about the market, which is what we're gonna be talking about today, and how hot it is, and
the weather has not slowed the real estate market.
It's crazy.
One bit. It's bananas.
I bought her a condo. What was that? 8 years ago, probably, for $83,000, and we put $20,000 in it to get it going. There's one pending in her neighborhood right now at $219,000. So it's more than doubled in value, which, people in California who are listening to this, that might not seem like much, but we don't experience 100% appreciation in 8 years in Indiana normally. So,
well, kind of what got us, started on this topic, we were talking about some of the social media posts that we saw from the weekend, and I'm actually a really good friend with a real estate agent. He actually introduced my wife and I.
Right.
He used to be a personal trainer. He's a real estate agent now.
Yeah. Very
close friend, but he's a very successful retail real estate agent in town. And he listed on Facebook this morning last night, he had a crazy weekend with his new listing, 23 offers that he got over the weekend on a listing here on the north side of Indianapolis. I have another friend from church who's a retail real estate agent, posted 37 showings on a new listing over the weekend and 9 offers. And I've never seen anything like this in my career. I know you haven't either. We've been in business almost the same amount of time.
Right.
It's kind of even hard to gauge ourselves at times because, it's so crazy. I sold my house in 3 hours at full price in October. It's really something.
So that really, spurred our interest, all these anecdotal stories, and it made us realize that even with all the data and all of, being in this day by day, it's hard for us to kind of peel back the onion layers. But so we thought most people are probably even more in the dark than us. And so we'd give our impressions on why the market's so hot, what are the factors that are doing that, what we might see coming up if this market cools or if it would heat up. Just kind of, we don't obviously have a crystal ball, but based on the data and the markets that we have been through and similarities between all of them, kind of what we see for the outlook. So we think that should help folks in making decisions, both with investment properties and even folks who are listening who are interested in purchasing their own home. what could be to come, what to look for, and why the market is the way it is. It should be hopefully good information for them.
Yeah, at the onset of it, if you break it all the way down, there's obviously just a lot more buyers than there are sellers, and there's a huge inventory. I wouldn't say problem, but just more of a lack of inventory in our market, in all markets really across the country. That it's amazing how many people are out there buying homes. So, I guess to dive into that, why is there so many more buyers than there are sellers in this market?
Well, we know of a few factors that are really the driving force, and really there's the top one is in our mind is the financial aspect, which is money is really cheap. It's very cheap to get a mortgage. So my parents' first mortgage in 1988 in Florida was 18% interest. So their payment on a house that they paid $80-something thousand for was, I don't even know, let's say it was $1,000. Well, now that same $1,000 payment at interest rates in the 3s, even some people sneaking into the 2s, you can buy a lot more house per your dollar right now. If you look at it, and the way of the world now, especially in America, is based on payments. It's how you pick your car. It's how you pick your house.
No doubt.
And so when you're able to buy a lot of house for a small payment because of interest money, people are out there buying beautiful homes for very small payments, and it's very attractive, and it drives a lot of people into the market. Especially people who've living in an apartment and they're paying $1,500 a month rent, $1,600 a month rent. That same payment can get them a beautiful big house compared to what it could have bought them 10 years ago, even.
Right.
So that's the main factor, obviously. Now, there's a lot of other factors. People are spending a lot more time at home. So when COVID hit, what did you say?
Well, I think that when COVID first hit, I've got a tendency of being a Chicken Little. And I think that's always served our partnership very well, because you've been all gas and I'm applying a lot of brakes.
Right.
The
There's
other way of
times
saying
when
it
those
is I'm a wuss,
Right.
So when COVID first broke out, I was scared, from the aspect of, people wouldn't be investing in real estate, people wouldn't be buying real estate, tenants wouldn't be paying their rent payments. I was ready to jump in and make sure that we had a plan together for all of these things hitting, but it just didn't slow down. The Fed came out, they kept interest rates low, they promised to keep them low, and there was some stimulus money that helped drive it, but really what COVID did, and because we were in something that was so unforeseen, even our office, we were at home, in front of our TVs in our home offices. Our entire office was working from home, and many offices, businesses around Indianapolis and the country and the world, we're now at home working remotely, and I think that brought a new sense of what home, meant. Which I think that's one of the positive things that came from the pandemic, is maybe it instituted some more family values that we've been lacking
Right.
as a society for a while. But home became much more important through COVID, which added to the demand. And from what I hear, there's lots of people that are continuing to work from home, that they've done away with the office.
Sure. It's a paradigm shift. It may not just be this one little short blip in the people reacting, and life will obviously continue to return more and more to normal, but there's been a shift from what we understand in the business world of folks working from home. And I really understand the value, the commodity of a home and a yard is much more valuable than it used to be, because I bought my dream home right before COVID hit, and I had just finished remodeling it. And my dream home is real simple. It's basically a little lake cottage here in town, but it's on a full acre on a beautiful lake with koi ponds in the backyard and a yard. And I value it so much.
You got in at the right time too.
I know, before this, but I can't imagine not having that space,
Right.
I'm lucky. My family, I've got 2 teenage daughters, and most people are like, oh, teenage daughters. We like hanging out.
I'm scared to death.
Yeah.
I got 2 and 4-year-old daughters. I've got a while.
I mean, I got off easy because they're a lot like their mom, and she's easy, you know. So I had it easy, but we've enjoyed being together, and it's been neat. And having a place to do it that we love has been special. So anyway, the commodity of a yard and a house and square feet has become more valuable for legitimate reasons, you know. And then you mix in the fact that people who are in a home, they don't want to sell it, so there's a lack of supply. And the people that do want to sell it, they're hesitant to. They don't want to have people coming through their house during this, strangers coming and going, you know. So you've got that lack of supply, increased demand, and increased perceptive value of the product. And that feeds to a hot market.
It does. And I think that another thing that you can attach to COVID, and it's important to note, the supply chain for building materials has become very challenging. You know, we do some development. Thankfully, we've closed out our developments. I'm not really in the market to build anything right now because of building materials. But you know, me and my wife, we have land, and you know, we're interested in building a house back behind where we're at now. And looking at the building prices, you're getting a lot less house than what you did even 15 months ago.
Sure.
But what it has done with the supply chain being challenging, building materials going up, it costs a lot more to build new houses. And because it costs a lot more to build new houses, it drives prices of existing houses up as well.
Right. It sure does.
So it's, you know, I sold my house in October.
Right.
And the house just to the south of us, you know, sold 2 months prior, almost the same size. You know, we listed it, you know, $40,000 more than what it sold for.
Right.
And I knew I was really pushing what it would appraise for. So people say, "Oh, well, you sold it in 3 hours. Do you feel like you didn't sell it for enough?" Like, well, you know, at some point the appraisal is gonna come in. But you know, I think there's people everywhere that are thinking, "My gosh, I'm selling my house for a lot more than what I thought." You know, and I think a lot of that is to building materials and how much it costs to build a house.
We look at that heavily for the investment world. You know, everyone looks at the cost to build as far as, you know, values for houses. And that's one of the selling points that we've had for many years is, you know, we sell investment properties at significantly below the cost to build those same properties. And we're still able to do that only because the, you know, price to build has gone up faster than, you know, the market has appreciated. So, you know, that's a factor in the investment world too that we pay attention to. And those houses, even if you have a 10% appreciation on a $100,000 house, it goes up $110,000. These factors matter more the more expensive you go. Obviously, you know, it's simple, you know, statistics and math, but it matters for all of those. And so when you on the investment side, you have a lack of supply also, because we're in a judicial states, and even states that aren't in a judicial state, a lot of the trustees are shutting things down. But you know, foreclosure has been on hold for a year, and people don't realize what the market naturally looks like, even in a healthy market. People don't understand that there's 600 homes a month in Marion County, which is our central county, that go through the sheriff's sale every month that are foreclosed on in a healthy market. You know, so that's came to a screeching halt. They just stopped foreclosing on them. So, you know, there's not a lot of houses for investors out there to buy and do this with. We're still able to do them, you know, and find houses because we're very heavily in it and we dig deep and we go a lot of ways. And you were talking about our construction costs.
Well, I think that, you know, on the investment side of things, you're not finding many houses to purchase that are just cosmetic rehabs. The reason being, if they need very little work, you've got such a strong owner-occupant market right now that the owner-occupants are taking the homes that need little work. So far as and investors, if you're in competition with an owner-occupant, you're going to lose that battle 98 times out of 100. So those homes are not available to us and to other investors. Right. So what we've seen is you're buying houses that need significant work.
That's right.
You know, as far as our construction costs, you know, you're talking $25,000 plus 25 to 75,000 is kind of the range of rehab that we have now, where that used to be significantly lower. And when you're talking $25,000 to $75,000 in rehab costs for a home that is worth at max 160-ish,
right,
170-ish, you're talking substantial, remodels. So that's what I see in the investment market. I'm sure you would agree.
Yeah. So, I always questioned these foreclosure properties or investment. They look like investment deals that sell for above what the house is worth after you put money in it. So say the house, when it's fixed up, will be worth $100,000 and it sells for $90,000, but it needed $15,000 worth of work. That always blows me away. And you're seeing a lot of that. And I understand for a lot of folks, when they move into a house, they're going to change things they want anyway. So who cares if the carpet's a little messed up, because they wanted to put in vinyl plank flooring anyway. And so for them, it's no different. But at the same time, we're seeing people buy properties, investment properties that are in good shape, pay over market price for them.
Right.
That's how hot that is. And yes, we have tended to find more properties that need significant rehabs. And one of the good parts about that for our clients is they're ending up with houses with a lot more new in them than normal. It's when you buy investment properties, you replace what needs replaced. But if the plumbing is 10 years old, you're not going to replace all of the plumbing. There's no reason to.
Right.
However, in a lot of the houses we do, now you're getting all new systems and all new, much more than typical. So there's benefits to it too. And
is that because the rehab is so substantial? I mean, you're already a lot of times busting out walls, or
right,
you're changing the electrical anyway.
Deeper.
So I mean, it's just you're peeling more, layers,
correct,
off and
right,
rebuilding it back, right?
Right, and it's a model that we saw, in a lot of older markets, like say a Chicago. You see a lot of a
ton in Chicago.
Yeah, you see a lot of that where people really do large remodels, and for our market, it was a lot of more cosmetic for many years, but. And that will come back eventually.
When we first started doing turnkey, it was rare that we had a remodel that lasted over 2 weeks.
That's right. Carpet and paint a lot of the time.
That's it.
But now owner occupants are snatching those up, and in order to get good investment properties for our clients, that's what we have to do, is these bigger projects. And it's been interesting. You can make some pretty cool houses. I think the end product is better.
Right.
Our end product right now is better than it was in the past. It was great in the past, but we're able to do a little more stuff because the rehab's bigger. So what do you see for kind of the future?
I think that it's the hardest it's ever been to predict. And I've told all of my clients, all of my friends, that when you're in a market climate that we have been involved in investment real estate for as long as we have and had such a good pulse on the market, and when it's hard for us to predict and it's hard for us to explain, I feel like that there's something coming. It can't look up, 37, showings, 9 offers, 23 offers,
right,
on these places. That's so crazy from what we were used to. I mean, so crazy.
It is.
That sustainability is impossible. So what's going to happen immediately is that the inventory is so low, you're going to see a lot of real estate professionals have bad years for 2021. There's nothing to sell. Right. You're going to see that. What will eventually happen? Rates have only one place to go.
Right.
They're not going to jump super fast, so it's not going to, you're not going to go up 2%. In one pop from the Federal Reserve, but they will start to inch up. Inventory levels will slowly, increase. I mean, like I said, it can't sustain. Right. It can't sustain this. Who knows what's happening with the worldwide pandemic? So that's a wild card that no one can explain. But
so I think it's pretty standard agreement in our industry that a lot of the feeling, the undercurrent right now is that we expect a cooling of the market. Now, we don't have a crystal ball, obviously. We're looking at the data, we're looking at the possible rate changes, and we see that there's, and also, depending what happens with the global pandemic, people could be more comfortable, listing houses and not be as worried about buying houses. But no matter what happens, we kind of see a cooling of the market in the short term, meaning in the next year. So, for the next year, we see that there could be a cooling of the market. Now, that's kind of what we see coming. There's a lot of factors that can change that. Now, we also see there's some reasons that you should prepare for an even sharper cooling of the market that we see. We don't know what it is, but historically, when you see increases of this type, you typically see, if you look at any of those charts, you typically see a cooling, and then some sort of factor will drive it back down a little.
And you're saying you just don't know what that is?
I don't know what that is.
So would it be safe to go back to and refer to the stock market of 2008 and the
great example,
the
Bear Stearns,
the Bear Stearns collapse?
Yeah, great example.
Then of course the mortgage meltdown.
There's obviously a lot of factors.
No one saw that coming.
Right. A couple of people.
Yeah.
Big Short.
Yeah, that's true.
But
that's true.
Yeah, but other than that, the factors are much different right now. There's some fundamentals in the market right now that are very strong. Mm-hmm. There were some fundamentals in those markets that were not strong. They were hidden. So I don't see as much of a fear in the market as that. However, anytime you see hot markets like this and then an interest rate increase, you see cooling things happen. And with all the unknowns in the business world right now, there could be a lot of triggers that could cause a little pullback. So
I think the hardest thing for people to navigate is if a person thought that they were going to want to sell anywhere in the next 3 years, now's the time to do it. It's the way properties are moving, the values. I think now is the time to sell. But the tricky part of it is where do you go?
Correct.
If you're building a new house, building materials are up, and then do you sell and cash in to overpay for something that you move into? For me, in looking at the market, the buying cycles of the consumer are just so puzzling to me. And I'm going to go off to a completely different topic than housing. We are looking for cars for our office.
God,
So we have cars that are 5 years old, and we drive a lot for work, and so we went out and look. We have GMC Yukons,
right?
And we first got discouraged by the prices of everything is just shot up, but the other thing is that there's nothing on the lot. None. And you asked the salesman when we were out, what kind of discount do we get for buying two?
Right.
For buying two vehicles. What did he say?
He said, no discount. And I said, well, what
Can I get
if
a
the
20?
wheels?
Can I get a 20 spot?
Right.
Anything?
$20. Can I get a free shirt?
Yeah, nothing.
Hat? No. Full price? Yes.
Sticker price.
Sticker price, period.
No, he said no floor mats.
Right. No nothing.
Correct.
And keep in mind, this isn't just one dealer. We went to 3.
Those are $78,000 vehicles, and nothing. And they don't have any, mind you, either. No. And if you wanted to get a certain kind of wheels that a certain model that they had coming in didn't have, sorry about you. There it is.
They literally said, sorry. I said, I don't like those shiny chrome wheels. I just want ones that are moving. He's like, well, you'll just have to buy them. And I said, well, you mean pay the difference between those? No, you have to buy them, and then
you have to resell the wheels.
Yeah, and he said, well, you can put them on eBay. This is the car dealership whose business it is. So right now, there's so much money out there. It's just crazy. So it's not the time to buy, is what your point is.
It is, and I think that listeners can say, well, why are they talking about cars? We're this is a real estate show, but it's the buying in consumerism right now is just it's so hard to fathom. And they have 84-month financing to where consumers are upside down on their car payments. We see it in the rental aspect of real estate. No one has any money.
Right.
these people have all these great jobs, and there's no saving, and nobody has any money. It's just
I could talk for hours on this. I get worked up about this. When you see a report that 50% of Americans don't have enough money in their savings to pay for a flat tire, yet everyone's living in these fancy houses. And, I said it at the beginning of this show talking about everything is payment driven. So you don't look at what house you can afford, meaning you've saved up and can purchase it. You look at what payment you can make. Yeah. And I think that's a bigger picture, and I can go off on a diatribe for 2 hours and get on my soapbox.
Oh, it's nuts.
But that's not how I live. I was approved for X amount of a mortgage, and I got a mortgage for literally it'd be 1/8 of what I was approved for. That's how much of a mortgage I got, and I still feel bad about that.
And there's just so many people that aren't like that.
Right.
This changed so much in generations, and I think you see it like with the younger generation. Financial education is just not taught. But going back to the real estate market, I'm in real estate 20 years now. You're just over 20 years. Right. I've never seen anything like it. When I first got into real estate in 02, 03, 04, 05, it was hot. Nothing like this.
I think I would agree 100% on it being the time to sell. It's just like stocks. You want to, buy low, sell high. Now is high for real estate. It's simply high. There's one little aspect of it though where it's still below cost to build. It's still cash flows really strong. And it's that little niche that we really do focus on. Those properties, I really do, and it's not just because that's what we help our clients do. We believe in them.
Right.
I think those are still a deal. I think if we had another year of this market, we would probably tell our clients to cool down a little, not be as aggressive. But, those are still in that little buy box. They're going up, though.
And I think, with investment property, you're still, like you said, you're able to buy below the cost to build. And with the cost of materials going up for a lot of the owner-occupant sales, there's still opportunity in the investment side. But like I said, it's houses that investors or ourselves are buying and putting a lot of money into, where we take that guesswork out for a lot of people that buy turnkey homes off of us.
Yeah, and just to be totally transparent, for the last 2 months, we really feel strongly about that little niche being a buy, that we've bought more than we ever have probably in the history. Clint has been on a tear with lighting up our acquisitions director, and obviously we're a team, so backing that up with daily meetings, making sure we're offering on everything. So we're real hot on the buy mode. But when it comes to more expensive real estate and what traditional people are probably looking at, this market's a little hot. I wouldn't be too aggressive. At the same time, families need places to go if they're home a lot, correct, and that's what's feeding it. So
it's a wild real estate market. It's definitely tricky to navigate. Like I said, great time to sell your house. If you're looking to sell your house, most likely you can have it done in a matter of days, if not hours, and many offers on properties that multiple offer situations driving the price over list. It's crazy. However, if you are looking to purchase a home, be a little bit more cautious. Values are a little overinflated, but interest rates are still very low. So there's a cost risk analysis that always has to be made. But it's been exciting to watch this real estate market. It's been busy for us. Our phones have rang a lot from investors and owner occupants. But
so to summarize, it's hotter than it's ever been. The reasons are, there's a lot of interest rates. COVID has driven people home, spending more time at home. The future, we see a possible cooling off. Now's a great time to sell. And if there's a big bump in the night, which usually there is every 5 to 10 years, there's something that'll bump the market and cause a scare. We could see a little bit more of a drastic pullback, but we're pretty bullish on investment properties. We're pretty bullish on selling now. If you've got some heavy, big assets, now's a great time to sell. Mm-hmm. And for the future, there's always gonna be people out there doing what we do, trying to make it possible for everyone to succeed in whatever market conditions there are.
You heard it from the lion's mouth. He's a very, very smart man, and I do mean that. But we're the Homeboys. We're excited that you joined us today. And until next time, happy investing.